Time for an in-depth look at the market action. We have Dr. Jun-sok, Professor of Economics at the Catholic University of Korea, joining us on the line today. Professor Young, it's great to have you with us.
Happy to be here.
Right. First of all, stocks in New York reached new record highs again. Possible contributing factors include non-farm payroll employment figures exceeding expectations for October. With growing anticipation that the U.S. economy could bounce back to pre-pandemic levels, travel-related indices are spiking as well. So what should be the key focal points on the global markets this week?
Okay, well, as you stated, all three major U.S. indices hit record highs on Friday. Just Friday alone, Dow went up by 0.6%, S&Ps went up by 0.4%, and NASDAQ went up by 0.2%. For the entire week, Dow went up by 1.4%, S&P went up by 2%, and NASDAQ by 3.1%. So the stock market in the United States had a great week. And as you stated, one reason for that may be the October employment report. October employment outperformed expectations. The number of jobs rose by 531,000 jobs. But even more than that, they revised the past numbers. September number was very disappointing at 194,000 jobs created, but now with the revised figures, it actually did fairly well, 312,000, and they also revised August number upward as well. Last week, the United States had an announcement that they will start tapering, but they shrugged off that news, and the market didn't seem to be affected at all. They had a very good earnings report season with a majority of firms that reported saying that they outperformed earnings expectations. So this has contributed to a very strong market. And with the Fed's tapering announcement, they also said that if they stick to the schedule that they have in mind, tapering will take 8 months. That means the interest rate for the United States will probably not rise until the second half of next year, which may also have provided a boost to the stock market. Now, today it does seem like the stock market futures are slightly negative, so that the market may be engaged in a bit of a profit taking, but also over the weekend, the United States Congress passed the $1.2 trillion infrastructure bill, which should add demand to the economy. Usually you would think an announcement like that would boost up the stock market, but perhaps they are now too concerned about inflation, the possibility that the Fed may speed up tapering and accelerate their plans for interest rate rise. So at least for today, the stock market futures seem to be saying that the markets will open a bit lower on Monday, U.S. time. For Europe, DAX and CAC rose all last week. FTSE was rising since Wednesday. That's roughly in line with the U.S. numbers. But Asian markets were mostly down last week, except for one day on the 4th, presumably when the Fed made their announcement. And in trading today, Nikkei and Hang Seng went down, Shanghai went up. There seems to be some decoupling, Europe more or less following the U.S. market, but the Asian markets acting separately from the United States.
Well, South Korea's benchmark index KOSPI dipped to 2960 levels due to foreign and institutional sell-offs and impacting big names like Celltrion and Samsung Biologics. The tech-heavy KOSDAQ closed slightly above the 1,000 mark. What's your analysis of the domestic market for today?
Okay, well, Korean market is also another place where the market seems to be decoupling from what's happening in the United States. If Korean markets follow the U.S. trend, it should be going up, but KOSPI, it was down today by 0.31%. It closed today at 2,960.20. It did recover just above 3,000 for one day last week on Tuesday, but it's been more or less on a continual downward path the entire week. As you said, the individual spot and institutions and foreigners sold. KOSDAQ, it's a bit of unhappier news, but still, they were up 0.11% today. They ended today at 1,002.50. They recovered 1,000 level on Tuesday, but after a fairly large rise on Tuesday, they've been on a downward path as well, even though they did go up today. Individuals sold, institutions and foreigners bought, and again, it seems to be the Korean market seems to be decoupling itself from the American market.
And in China, despite the power shortage situation and the pandemic, it managed to record solid export figures in October. Its government claims the country's outbound shipments jumped 27% on year for that month. But there are concerning indicators for the overall economy. So what kind of impact will this have on South Korea?
Okay, well, Chinese exports were $100.2 billion. Imports were $215.7 billion. The export growth rate is lower than where it was in September, so some people are interpreting that as a bit of a slowdown. We'll have to see whether that really is a trend or whether just the idiosyncrasy of this month or of October. Import growth rate was higher, so at least from the import numbers, it does seem like the Chinese economy is not being affected too much by the problems that you've mentioned. The exports are being fueled by increase in global demand, recovery from COVID. If that recovery continues despite the electricity problems and the bottleneck problems that China has, that will mean good news for Korean exports. But the imports of commodities by China cooled somewhat. It is not clear at the moment if that is because of a domestic economic slowdown or it's because the bottleneck and the supply of those commodities are not available in the global market. China had a record trade surplus of $84.54 billion. That's higher than $66.76 billion that China had in September. With the sensitive trade problems with the United States, imports from U.S. was only up by 4% to $13.2 billion. Exports to U.S. rose by 22.7 billion to 22.7%, to $53.77 billion, and trade surplus to the United States is $40.75 billion. That's lower than where it was in September, but still 30% higher than where it was in last October. So the United States right now is insisting that China keeps to President Trump's trade deal, and they seem to be not doing too well on that. That might signal a growing conflict between U.S. and China. But right now, I think China is at a bit of an advantage because a lot of this increase in demand for Chinese goods is coming from the United States as they're experiencing a recovery and the pent-up demand that we've been expecting since last year. So at least for now, Korea does seem to have a fairly good chance of maintaining exports to China for Korean intermediate goods, but we'll basically have to see whether this trend continues.
Right, and the nation's Ministry of Employment and Labor as well as Statistics Korea are set to release its latest employment figures. Despite the fourth wave of the pandemic, there are positive signs. The Finance Ministry is also set to unveil its Green Book. So, Professor, what other standout announcements should we watch out for this week? Okay, well, as you said, the Korean unemployment report is due on Wednesday. Now, last year there was a loss of 420,000 jobs and unemployment rate of 3.7%. That means this year it'll almost definitely be better than last year. Last year, October was such a bad time for unemployment and employment numbers that Korean numbers are bound to be better. The big question is whether we'll get back to the level of 2019, that is the pre-corona period, or whether we'll fall below that. But we'll definitely do better than we did last year. The Chinese trade numbers, we already talked about that. Some other important numbers that are coming up globally, U.S. Consumer Price Index and Producers Price Index are coming up. That'll give us some idea not only on U.S. inflation, but on global inflation. U.S. initial jobless claims and wages will also be coming up on Thursday. Wage data will especially be very interesting, again, because of the implications on U.S. and global inflation. U.S. oil reserves
also dealing with the energy prices, and the European Central Bank economic forecast will give us some indications on how the Europeans are doing with the not only inflation but the growth rate. They've been falling behind for the other advanced economies lately.
All right, Professor Jun-sok, thank you so much for providing us with your insights. We appreciate it.
Thank you.